Hey everybody, DayTraderRockStar here. This is the high probability watch list for the week of February 14th. Same Valentine's Day is around the corner, Monday, so we'll see everyone then. So yeah, let's get into this. It's Friday. I'm doing the research. Paul's on the mic. He's doing a great job. It is about 1 o'clock, a few minutes before 1 o'clock, and the market is starting to turn over here. We've been kind of trading off most of the day. I'm seeing Airbnb here just drop off. The market pretty much dropping off, and this is definitely the interest rate issues that are playing out in the market at this point on this move right now. And let's just, I'm going to find my mouse here. That's why I'm having a hard time starting the video here. All right, so I want to zoom out here. The Airbnb took off a contract. We kind of planned that out this morning to kind of get out on some strength. I ended up getting taken out on one. I'm still holding one contract to 180 March, I believe it is. I'll review that later on. But now you can see that's starting to pull over. Everything's starting to pull back now. And we're inside this bigger channel, so I'm looking for any opportunities. I haven't traded the futures today. I haven't traded anything other than selling that Airbnb call this morning at 1350. Market here is reversed and is heading back down quickly. We were in positive territory right out of the gate, and then from that point on you can see it's really established downward movement here. Really, I mean, it's a perfect channel. Everything looks organized. I guess the first thing we need to do is look at that 60-minute. The 60-minute was getting oversold. So going into a Friday afternoon, market's starting to sell off a bit, but we are going to be oversold on the 60. If we're not, yeah, we are oversold on the 60 right now. This is kind of that pullback area. We're approaching it. It was between this low pullback and this high where this candle extended up here. And you can see there was a little choppiness here. We broke down. We failed at that level. We came back to that level. And now we're gonna actually, looks like we're gonna try to test that level again. So that comes in at 54, right around that 54 level. It's also the lower trend line. It's definitely something I would look for a move off of. We'll probably be here for that. We'll take a trade off of that level. And if not, we have an underlying trend line right underneath us. So we have a couple targets right here, 54 and 420. Now 420 has always been an interesting one. It just always seems to show up in the markets. All right, let's see. So let me move the chart over so you can see the time. You can see the price. Sorry about that. Just getting everything set up here. There we go. 45.54, 44.60. Keep an eye on that. If we look at the 5-minute now, 5 minutes are already oversold. And one thing we like to watch for is 3 setups in the market. Like I said, there wasn't too much here that I was really liking today, but right now we just came into what I call triple stochastic rotation play. It's where all the stochastic bands that we have pushed under 20 at the same time. Lots of times these take time to get down there. They're very choppy. But, and again, the 60 takes the most time. So now when they're all set up down there, this is usually a good spot. We have multiple time frames lining up, the 1 minute, 5 minute. And even if we get a bounce here, like this is predicting, and then we kind of come back, I would also be looking for a divergence in this area too. The last setup was about here. This was that triple stochastic. Probably I would say, right in this area right here. When it got under 20, they were all under 20 right here, and that was right around there. And it did go a little bit lower, maybe a candle, but this is a harder one to gauge exactly. So you get into that zone, normally you're going to be in a good position. So here's the same situation. Watch this happen right now. If we get that rotation, off of this. I would consider this the third setup. It's not the rank number one. I think that the bull flag, on a good bull flag and understanding the channel of trends, and you have a good trend, the bull flag and bear flag are excellent. But they all have to be traded in the right conditions. And that's why you have to always set your bots and set everything to the conditions of the market. Don't expect, there was news yesterday, there might be a little bit more, there's more of data points out here on the interest rates that are affecting the markets. So we do have a level below us, but we have a triple stochastic rotation here. Where it goes. We should circle that area off too. Let me circle that area off. We're talking about this. So when I go back to review videos on Monday, we can talk about this level, see if it, see what the results were. Never got our divergence set up. I was watching for this. I posted this in the room. I said, watch for maybe a possible pullback to the trend line, the divergence. It was actually a stronger, the pullback was a little bit stronger than it didn't give us a big pullback. It just gave us a little pullback. This corrected back up, continued to move up into the 200 period moving average, which is always a good one in the downtrending market, the 200. And it's pretty close to that trend line, and that's where we are right now. So we are going to concentrate on a lot of similar stocks that we're kind of getting into a good level down here. So I want to review those because we had a lot of new people getting into the site recently. Welcome to Day Trading Radio. If you're receiving this and you're a member or a trial member or a nice lifetime member, appreciate it. And, we're going to go over some stocks that I put on the HPS watch list. Now, the HPS watch list is on your dashboard. So if you sign in here, go to members area, go to your dashboard. It's right up here. It says watch list. Actually, you can't see that. It's out of my scope there. It's right here where it says watch list. You click on that, and the watch list will pop open. And yeah. And this was this week's watch list. Any stocks that that fit the criteria for a high probability setup, which is kind of a foundation methodology that you learn as a newer trader. If you already have a trading experience and have developed your own trading style, you could take what is useful here and add it to yourself. You will find that the divergence setup will be the best thing you've ever come across if you use it correctly and you have patience. You have patience to wait for the best of the setups. Different type of divergences. And we know. Look at it. I could go back all week. All week I've been pointing them out. All week, every time we point them out, it's easy enough to see them. Even overnight, divergence, boom, big move, divergence, big move. I think I pointed out maybe 20 over the last week. Maybe 2 didn't really work out for some reason or another. Might even, I haven't even considered the news events out there. I also pointed out a lot of the triple stochastic rotation plays and circled those out in real time. So a lot of these you could see here. These are nice moves. So just waiting until your pitch is there. That your time is there. You got all the conditions in your favor. That's where you want to be taking that trade. And there's a couple times when that happens, and that's what we look for. The divergence trade right here. Nice steep divergence. Now, didn't get, actually a divergence low. And this was at 9 o'clock in the morning. So the divergence low is always where our stop would be. So you can see it didn't come down to the divergence low, but it didn't take right off either. This might even concern people. So, but look what happened. It opened up at 9:30, and that was a catalyst that moved that stock. So it's a little bit more difficult. If you hold a divergence into a news catalyst or an opening or a closing, you could really you could be lucky. This was very lucky to be on the right side of that. Here's another great example of that triple stochastic rotation. I want to make sure you guys understand the concept of this. Each one of these different time frames, I start from the fastest to the slowest. Fastest is usually the less time in there to calculate, and it plots it and it moves around faster, so you get this real choppy active band of oscillator here. And then as the time frame goes by, it's the average extends and it becomes smoother and it doesn't move around as active until you finally get to the 60 period here, which really represents the 5-minute time frame. That's what I really like, is using the 60 to just looking at this line right here. I could tell you so much about the market, because I've been doing it so long, using this line and how it compares to the other lines. And if we see this type of coiled, not a full rotation, choppy, making its way down, and this one's the same thing, kind of bouncing and making its way down, and then you see that this seems to be just waiting, and everything seems to be waiting for this one finally to get and hit that 20 mark. And right when it hits that 20 mark, everything else is under 20. That is your trigger. And then you had a reversal candle. So it's just something, this is important to have, something in your favor to take the trade. There's always gonna probably be bad beats out there based on news and stuff. But look, oversold. Now there could be it's a little one here, but it really takes understanding of the first rotation. You want something that's kind of down here and it's not rotating from the top and it's just hanging out down here. That tells us that the trend is down, and you probably don't want to try to buy the bounce on a downtrending market. You want to get this more of a, so this is having a hard time getting above the 50 line. It's kind of turned back down. It's starting to turn back down. I wouldn't really count on that unless it was coming down and made a series of lower highs, but this wasn't really that case. You could just feel the weakness in that. So a little, experience added into the formula is important. That's the number 3 setup that we look for. The number 1 setup, of course, is the pure divergence. The steeper the slope line, the better. And then in a trending market, if we can establish a trending market, trade whenever you have the 60 extended on either direction, and you have that fast rotation with the price holding around the 20-period moving average. It's called the 2020 bull bear flag. That's it. That's your business plan. Put your feet up on the table. Turn on the tunes that come along with Day Trading Radio. Listen to mine and Paul's great commentary. And when we see a setup, like right here, Jesus, Johnny. Right there. Damn. This always happens to me, though. Now I'm 2 ticks behind. And I end up considering myself chasing in this case. I saw that. I would see that a mile away. All right. Well, there you go. A divergence is going to give you that move. Damn it. I should go on the mic and tell them on the other side there. Sorry, guys. I didn't give you an update on that divergence there, but there's a divergence happening on the 1 minute. I was in the middle of my video, so I just opened up the mic there for you. Damn. I didn't even have my orders up. All right. So there was your divergence right there. There's the move. Just like back, so we have a 3, and that's the number 1. Not this. This was a triple stochastic. What did I say? Watch for a divergence after the triple stochastic setup. If it just gives us a little bounce, it pulls back quickly, a higher low in the stochastic, you're good to go, baby. And look at the move. Every time. So you got to be a real believer of this, and to be a real believer, you got to take action. I apologize. I'm not on the air right now. I don't know. Maybe Paul gave you this one. I don't know. But that's money. That's your what you're trying to do is trying to make money in this market. If you're not going to take this, you're not going to open an account and do this, then you're full. You're not going to go anywhere. You got to risk that. You got to jump in. You know what I'm saying? You got to take that shot. Get into the habit of doing that, and get into the habit of waiting. That's probably the most important thing: is over trading in on any market, and this prevents you from over trading. Look at the move. How do you say, well, you know what? John's right. He's right 90% of the time when he points these things out. Maybe I should start, doing something about that. Maybe I should look into this. Well, we watch the show every day. Enough people out there going to figure it out. But the patience, and this happens overnight too, more and more. Now, I'm not promising anything yet, but my family has their winter trip out to Oregon, where I stay behind and I do a lot of work, and I try to do an overnight session, one of those things, and I'm actually going to have an opportunity to do that, and I think it's going to be next week. This week is almost over. The end of the next week, following week. So it will be not next week, but the following week, like Monday and Tuesday. I could do late night over the overnight shows and trade futures overnight. I'd like to do that one day, like kind of a marathon, like a marathon, traders marathon session. Invite people from all over the world. It'll be like New Year's Eve across the world. So John, you're showing us how to get in, but when do I know to get out? Well, that's very easy. Very easy. It's harder to do because you start to feel that greed and saying, well, what if this is the low? Divergences usually put the low in. When I look back and say there's a big pivot between a downward move and an upward move, I look back down there. There's probably a good chance there was a pivot here. I mean, a divergence here on a bigger time frame. And I'm looking at it right now, and I could probably tell you right here that this was almost a 5 minute divergence down here. It's hard to tell. I mean, this coming back, we almost came back relatively back to the price. This was such a high setup. I mean, that was your strong divergence, but that was a very hard one to read. That was a very hard one to read. This was an easy one to read. This was an easy one to read. This one was an easy one. Well, no, that was a triple stochastic setup. This was an easy one to read because it just happened live with us. So how do you get out? Well, you get out on the first rotation above 80. So you kind of time it. You got to be able to, you got to be focused on these. All right, here we have. All you have to do is be focused on stage one, because once you find a stage one scenario where you're oversold, the market kind of took out the lows, it's pulled away pretty good from the 20. You're just looking for something that that the stochastics are oversold, that you're going to expect a little bounce, because you need that bounce to get the pullback quickly. So at this point, I'm like, all right, let me see if we have a bounce. If we get a bounce, let's see if we that's when I get interested, when we get a bounce, because I'm looking for that fast little flush. And this reverse, and this not really completing its cycle. And I want to see that on multiple time frames. And that usually, a good reversal takes off from there. So, and then from that point on, you want to scale out when this gets above 80, meaning you take off your initial, and that's why it's so important to have multiple contracts. You lock in profits. You lock them in. You already got a successful trade. Say your cost average or your entry was here and you got that pop. You probably, if I'm watching this and trading it correctly, you're probably getting in down here, right at the end of this candle, because we're watching the candlestick. I want to see how it's closing. We're going to know that, 59 seconds of the candle here. Where's my candlestick counter here? Where is it? I can't even see. Oh, it's right here in front of me. So this is what I always have here, you know, and I count those candles and the countdown, and tells me if I'm going to have a nice setup. Only on divergences. That's why I like to have that near my divergences. And then you just put your break even. You move your stop up to your entry zone. If it's a good divergence, usually it's going to hold the 20 period moving average and it's going to trend up. This one came very close back down to that, but it's starting to bounce now. But you have nothing to worry, you know. Say it comes back and chops you out. You already took profits on your first, you know, this is a win-win situation. If you have a divergence to take it, the stop is automatically defined. The first profit is automatically defined. The second, you know, inshallah. The gods, you know, want it to go further. Usually you have that 5 minute down here that we pay attention to. And that kind of gives us a better feeling of how we like that follow through is going to be. Not everything's going to take off. So you're going to have a little pullback, and then you're going to get if you are going to get this as a bottom here, then you will eventually get another higher low. The negative on the day here, 2 o'clock. If we're trading near the lows, it's not good for the end of the day. And the lows are right underneath us. So we had a little divergence, a little pullback. First pullback, you see it's starting to climb here. It's actually going into a nice little education mini webinar here on how to trade divergences. I hope you enjoyed that instead of some other stuff. We just happened to catch a nice one. Catch it like it's an animal. We hunt for these things. To sit up in my tree all day waiting for one to come by. So, all right. So let's go back to what else we were talking about. That's what we're waiting on. We did a market radar.